following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour for this the 11th day of November, and certainly to the vets, our thanks, and really special day. And let's look at the market. Thank you to our hosts previous to this, Tom and Larry and John. Hopefully we can keep this up, that great standard. Looking at the 10-minute chart, there's a left side, right side price time match in the E-mini. From right here, there should be a little bit of a rally. Whether it becomes a bigger rally or not really depends. At 21.53, was sold 21.70 low. If it takes that out, then the low of yesterday at this time, 201.47s will be the key. Now, what's really interesting about this is that I'm going to go into a couple of the details in a moment. Let me just first of all say the H pattern that we always look at can turn to a very positive cup formation if the E-minis can crack 21.55 in the next hour and a half instead of breaking under the 21.50 low. So 21.56 is the 9-period moving average. Let's see if we can get to at least 21.55 in the next 2 10-minute bars. This is a very critical moment. But look at the E-mini. E-mini down 14. It goes from 28.50 to a high of 21.80. I mean, we're talking 200 points. That is an incredible move in the E-mini. And now there should be some digestive phase. So I want to talk about that in a moment. In the 120-minute chart of the E-mini, we've done a Chapman Wave peak C1, peak C2 double top at 21.80. This is really a sideways move. Normally I'd do this. I'd grab the two bars. It's just easy with the tools that I have. And I put in a rectangle formation. And the rectangle formation confirms what we were talking about. A low below 21.50 makes 21.47.75. The low of yesterday yesterday at noon, very important. Oh, was that yesterday at noon? Yeah. All right. I want to get out of this. I want to do some other work. I had a bunch of questions, and I want to get to those questions because they were quite pertinent. So now let me run the numbers. And as I run the numbers, being Friday, being the end of the week, let's look at what we've achieved and what hasn't been achieved this week. The Dow, INDU. Single leg A to the upside. Yes, I mentioned the B. It was a mistake. I was talking about the 120-minute chart. That wasn't a B. It's actually made a peak C, and it needs a D to complete. We'll get into that. Let's just do one thing at a time. Within the formation of the Dow chart, this single leg A going from 17,883 a week ago today to this level right here, 1110. Now, let me just say, I said a week ago today on the 4th. Yeah. To that high of 18,873 does a whole bunch of things. Maybe I should do it separately. Yes, I'll do it this way. Look. This is the Dow daily. I'm just trying to make it as clean as possible. If the futures continued lower on Wednesday, and then turned around, we would have seen this empty zone hit. Now this empty zone is incredibly important support in the 17,000, below 17,800s. Just, I can't even emphasize to you how important it is. Why? Because if this becomes a cushion, and we've already, let's just say today yesterday was the high at 18,773 in the Dow. This is what I show my subscribers to my opening call every day. Go into a lot of detail in terms of what we're looking at, why we're looking at it, etc. For instance, right here, this is what I said to the subscribers. Right there, there's the chart that you just saw. Whoops, no, that's the 120-minute chart. This is the daily chart right now. It should be. There it is. So there's the daily chart. And then I give a whole bunch of discussion here, and my thinking is we should see weakness today with a minus 30s rather than a plus 30s at the close. And after such a spectacular run-up, perhaps we'll start making a flag-like digestive session. All right, that's one of the charts. Then the 120-minute chart, which was right. Can I find it now? 120-minute chart, right. That's the one we're looking at. There we are. So here we go. So here's the 120-minute chart. Then this is the one. 120-minute chart. In the Chapman Wave methodology that I've developed, we are in leg Chapman Wave 4 to the downside, expecting a 5 to the upside above 18,873. That's a 120-minute chart. Yesterday we made a peak C. Today we're pulling back. We haven't gone above 18,873. So that says that the previous support, and now I can go to the live charts, that the previous support in the daily chart at 18,668 is going to become very important support. I'm not sure we're going to get there just yet. I think we need to just spike one more higher high. I'd love to establish a leg B to really say it doesn't matter how choppy we get, we should be making higher highs and at least for now higher lows in the daily chart, or let's just say higher highs. There will be higher lows if we hold above 17,883, which of course we should if we're going to make higher highs. Now that's going to be very important. So now I can go to all the different time frames. The daily is in leg A, probably a peak A today. And I'm not calling this yet a single leg A up. It could turn into that, and that would say that if we crack a close below 18,500, 18,420 is a 9-period moving average. So that's a really important support zone. A break under that says it's an aberration. Yeah, we could have gone to a peak F in the weekly chart rather than A. And watch out, we've got a couple of choppy weeks here that are going to consolidate after this enthusiastic Dow and financials, XLF, and a number of sectors just spiral to the upside. Okay, so now let me do this. The weekly chart broke out. As far as I'm concerned, it's not that at all. It's the monthly chart that's gone to a leg D. So the monthly chart is very bullish in leg D. And yes, of course, I always say in Ds, you've got to be a little bit careful, but not if you put it together with the S&P. And the S&P is digesting this big single leg A to the upside. Now, this is a gray A because it did not make an all-time high above 2193.85. So I call it a gray A. What does gray A mean? It's just my vocabulary. It's my library of colors and text. Just in one single visual, you've got it tells you a whole story. It tells you that, yeah, I am going to, because the stochastic and MACD are so strong, I'm going to put an up arrow suggesting higher highs to come. At the same time, I am going to say it's a gray A because it's below the previous major high of 2193.81. But in the monthly chart, what we've done is we've only made a peak B. There should be a C and a D to come. That would take the Dow to an E and an F. There's a whole a panoply of concepts that goes with this particular thing. But the bull market in the monthly charts, the Dow and the S&P are absolutely intact. So I'll be back. Basil Chapman, Dow's down 50, S&P's down 12. Be right back after these important messages.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Now, folks, we're back. So let's go on with our little story here. So the SPY at this particular point is creating some kind of a flag formation. Let me just outline that right there. And it says the decisive close on the 120-minute chart below 2182.30, this is cash, and it's at 2154.81 right now, would change this scenario somewhat. Okay. But the S&P weekly chart had a very nice candle. It's giving back some of it today. It's the monthly chart that's still very impressive to me in a buy mode. The QQQ series had a very sharp decline intraday yesterday, and it's still weak today. It's trading at 114.99, and I've been speaking about this for a while, saying one of the reasons why I did not just jump and grab all the long positions that I had been planning to do on Wednesday was because I was a little nervous about the peak F top in the weekly chart of the QQQ series, because the way it came about, and you know my theory about in the Chapman Wave, the quicker you go BCD, or in this CDE, but in this case it was actually peak BCDEF, the quicker you have a pretty serious decline, not a major top, but a serious decline, and they can last a little while. In fact, it takes a little time. Well, lo and behold, this week is confirming that exact thing. Look, there's the weekly chart, and yet the daily chart is still holding pretty well. And a monthly chart, I could give it an alternate count, I suppose, peak F/B. Everything about it suggests that I should stay at 94% in the stochastic, stay with it as peak, potential peak B if there's no new high above 119.66 this month. That's number one. And number two, you remember I went through Amazon, and let me just do that again. Amazon, I had that Chapman Wave 5 in the daily at a peak F top. I had a Chapman Wave 5 in the weekly at a D top, and I had a Chapman Wave potential leg F, and I said, my thinking is I need to just keep this as an F, but I really should be putting F/B. After all, Amazon is the Amazon of the online marketers, and they always benefit in the holiday season. And my concern was that the RTH, that's the retail index, had given me major sell signals in the daily and the weekly, and I was watching the monthly very closely, and still am watching that monthly closely, because it's suggesting that there are some serious problems there. So that whole aspect will put me on a little bit of a holding position here. But let's continue, because I want to show you the IWM is holding very well. It's up 88 cents at 125.39. It's made a new leg to the upside above the 125.88 peak E in the weekly chart. Very unusual. Now, could this turn into a Groucho Marx eyebrows? I'm going to call it F for now. I should really put F/B, and it's waiting until Friday at 4 o'clock. And over the weekend, I'll do a little bit more. But wait a minute. Look at that nice peak A, just 1 month down with a slightly lower high. And now we're making leg B. I love this. But wait a minute. Nobody talks about this. There's something else that's important. This is the IWM, iShares Russell 2000 ETF. Why don't you try looking at the IWB, the 1000? And that's saying, the little guys, the very small caps are actually holding pretty darn well under the circumstance. The daily chart is not as powerful as the IWM Russell 2000. And the weekly chart is good at trying to get above the Chapman Wave falling axe formation. I don't know if I got time. I don't want to do that, even though it's Technical Friday. Like there's so many other things to do. That I'm looking at this and saying, wait a minute. We've got something very interesting going on here. We've got the weekly chart trying to get above that falling axe declining trend line. The MACD is trying to turn up. The stochastic has turned up, but it's still way down at 21%. So what happens next week is going to be really important right across the board. Why? Because if you start to see the small caps break down, and the IWC, which is the microcap, I had it notated. I haven't got it. I'm sure I haven't got it. No, I haven't got it notated. The microcaps, which is what I wanted to do, but I wanted to actually notate it first, but I had a question about it. A, B, C, D, E, F, double top F, and we've just broken out. The microcaps, even the tiny little bugs in the indices, it's doing beautifully. Look at this, up 1.08 to 76.68, up 1.39%. Thank you for that reminder. I like this, and I'm going to say to you that there is something going on here that is not being recognized by many people, and that is that there's a filtering phenomenon going on right now. And that filtering phenomenon, now I've done the indices, I want to show you something important, is cutting right across. You've got gold down $36 at $12.29. Yesterday I discussed it. I said, I'm pretty sure that I'm going to be calling this a peak F. Peak A, B, C, D, E, and a right arm extension. It's actually what I call a rogue wave. This is just a perfect example. We can study that. Chapman Wave, rogue wave. Right there. I'm not going to say peak F. It usually happens at peak F, but it's not 100%. But this is really important. So this rogue wave, which says that from that peak E, you were pulling back very sharply, and then suddenly there was this one news-related event that spiked the gold. Spiked gold up to the high 1330s, and then it closed way down in the 1270s, and now it's trading at 1226, way below the starting point of 1243.2. This says to me that my belief for a long time that gold is holding very well. At a later point, it's going to become very important. It is now in the stage that says that could be a single leg A to the upside, even though it was 8 months. And that we've got to monitor this very closely. But wait a minute. I've been waiting for leg D in the dollar. Dollar's trading at 98.97, up 18 cents right now. Having that spike to the upside in gold, that was the plummet to the downside intranight. We were watching this on Tuesday night for those of us who have been monitoring everything overnight. Dollar went to 95.89 and then closed that same Wednesday at 98.70, 98.50, closing 20 cents off the high. And then yesterday it went to 99.08. It is within an eye blink of going to 100.52 for leg D. I think that's really important. And you remember I spent a lot of time last week talking about this pattern, the Chapman Wave, the double U pattern, two cups together, what it means, what's the implication. It's like the pattern on the downside that I speak about, the lowercase m, right? So within this case, I've got a question. Please discuss the V move in daily dollar and what the velocity of the move means. I will do that because it's really important. So let me just finish up all the other things. You got crude oil right now down, oh my goodness, down $1.50 at 43.16. It will make a leg D to the downside if it takes out 43.07. There's that arch formation that I've been talking about, rotating between the cup and the arch. And that monthly chart is starting to look very, very poor. That should be helping the airlines. Let's see, airlines. No, airlines are making a peak F/B in the daily, and the weekly could be a leg E, monthly in a leg B. The IYT, oh my goodness, look there. Here comes the bell. I'll be back. We'll be looking at the iShares Dow Jones Transportation Index. Dow's down 64, S&P's down 14. I'll be right back. I'll show you this chart as we're going out. There it is. We broke that low. The next low is the one.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, so let me do. I got these bunch of questions. I got questions in the. I got some really interesting things going on. I think if I complete, I'll talk about the V shape. Let me just for a moment say that a V-shaped momentum that's going sharply down and then sharply right back. If you take out and close above the left side high, then the consolidation down should be very short, and then you should make another move to the upside. That's number one. That's if you close sharply above the left side high. In the cup formation, you have to close above the left side high in a leg C. something like that. Because if it's a D, the answer is that when in a Chapman Wave cup and ladle, what happens is you break out and you go all the way to a D, and usually it goes even to an E, and then you come back and test the left side high. So the answer is, it's how you consolidate and break out above the left side high in a V-shaped pattern. I'm going to try to find some charts if I can. Oh, no, I wouldn't mean to find some charts. We just found some charts. We were looking at IWB. No, it was IWC. So this is the answer to your question is that if there is a stall right here at 78.65 in the IWC, the iShares Microcap ETF at 78.65, up $1.05 right now, then you will see a pullback, but it's the Groucho Marx eyebrows. If it goes much higher, it's got the raised eyebrow. I can do that, but you won't be able to see it because I've just done it, and I'm not being shown right now, so that's fine. But you raise the one eyebrow, and that's different because a pullback there should still go even higher. So this is an area, and I'll even put it in here. This particular area right here, I'll give it just maybe a half a point more. And if it goes up 1 point above this, you haven't got a V-shape. This is real momentum to the upside. Hope that answers the question. So the V-shaped pattern, if it closes above, should have a minor pullback and then go even higher. The cup formation, if it closes, it has to close sharply above, and it has to do that in an early letter. If it's at a D, it says, yeah, you can maybe go a little higher, but if it's a C, it says fabulous. This is really powerful. You should go to at least a D and maybe even an E, and at some point be ready for a pullback to test the left side high bar, the lip. That's what we call it. Okay, good. So now let me do a couple of things. I want you to look at JNK, which is junk. The junk is 35.09, down 39 cents. That's the Spider BB Barclays high yield bond fund. Made a peak F confirmation last week, plummeting from the 30, just under 37 to 35 right now. Looks like it's going to test 34.47, the low of July. So this is saying that the TLT is something you have to keep in mind as being. It's right on the 200 period moving average in the weekly. It was way in the 144s. It's now at 122s. 22 points. That is a major move in a very quick period of time in the TLT. And bond yields, I don't know if I can do it now because I want to go to our first caller, TYX.X. Let's just do this. This is the 30-year, possibly a leg F to the upside. Well, let's go to Scott in Safety Harbor. Scott, how are you?
Good, but kind of after what happened over the weekend, I feel like I'm sort of walking on cotton balls here. I don't know exactly, trying to get my bearings, I guess, at this point.
Okay, so I see that you had mentioned something about CX, which is
yes, I'm looking for position again. It's got a lot of negative stuff, obviously, with the peso and Trump and everything. But right. The bottom line is a massive concrete company. If you're going to do any infrastructure, there's going to be trucks out there that say CEMEX on them. So
you're absolutely correct. So let me just do one thing. I want to put here Scott, CX, and then I also want to say daily, put in brackets, Rogue Wave. This is just a perfect example of the Rogue Wave. This is even better than the one I showed before. The Chapman Wave Rogue Wave, I'll try to do this in the next, well, I most probably won't have time. The next one, I'll explain it. In this case, CX is trading at $7.26, down 27 cents, down minus 3.59%. It went from a low bar, whoops, right there, a low bar on the 16th of September, and it went peak A, B, C, D. That D was still with a very strong MACD, the moving average convergence divergence, and the stochastic was flattening out, was starting to get choppy. Well, what did it do? It had a spiral. Whoa, that's wrong. That's an E, and then that was an F, and this is a G. That's what it was. So often what happens is in the chart pattern, it went to a peak F top, and that was right at $9.27 on the 21st of October. Then it pulled back, and then there was this one sudden spike. But look what happened. The MACD gave a sell, so that was perfectly correct to put a down arrow for a sell mode. And at this point, you've got, this is on the 2nd of November, it's down at 826. And what happens is the MACD is very negative, stochastic plummets under 80%. It's perfectly okay. If anyone was short, doesn't matter about the price. I'm saying this particular chart formation, being Technical Friday in the Chapman Wave methodology, what we look at is the technicals. And this said you would be perfectly correct in keeping short even right up to the 4th, where it bounced to 876. But the surprise was that it had a sudden spike to a new recovery high above the 927 high of the 21st. It spiked up on the 8th of August to $9.35. Now, this is an incredible thing. What happens in the Chapman Wave Rogue Wave, you are 100% correct in looking at it as a negative stock. Then suddenly there's a news event, something happens, but it is based on quicksand. There is no validity to it. And what happens is that one of the indices, the MACD or one of the technical tools or the stochastic bounces, and there's a price. And at a certain point, you're looking at it and it's above 927. And all those people that were selling and shorting say, oh, my God, the price invariably stays long enough just to trap everyone into saying, oh, I should never have got out, I'm going back in. So they go back in, or the shorts cover, and that very bar within hours turns around and spirals to the downside. And this is just a perfect example of a rogue wave, and gaps down the next day. And your short position, which would have been unbelievably beautiful, is you've covered, you've done all the wrong things. Maybe you're even long because it was such a quick move, a gap down to the short side. Now you got in a penny above 927, and the next thing you know, it's at 727. That's where it is right now, 726. So I'm just going to say to you, based on my weekly chart, I'm a little concerned because this has all the potential to be a leg F in the weekly chart. It's a leg C, which is still good in the monthly, but on a short-term basis, I would not be surprised to see that you have to wait, have a little patience. It's between $7 and I'd say $7.12 to $6.92. That's the area where I'd like to look at it again. Until then, I just have to step aside and say, wow, that's not good action on the daily and the weekly, and it actually looks like it's going to be under pressure for a little bit longer. Now, I hope that helps you.
I think you're right about that, Basil, with it. 1690 is right where I had it. The fear is going to bring it down to that level that makes it attractive. And we need to have a little bit of the fear come back out of it. But then the fundamentals will kick in at that point. But the way I trade, 50 cents is a huge amount of money. So I'm going to wait. It's a huge
amount. And at the same time, I think you're absolutely correct. Have a little patience. You'll instinctively know when to start nibbling on this thing. So, hey, good luck. Have a great weekend. And thanks for bringing it to our attention.
Thank you. Bye-bye.
Thank you. So, folks, now look at this. Here's the 120. Here's the 10-minute chart. Remember the H pattern that I said could become a cup formation. Now there's a rally starting in the E-mini. It has to break above 2155s, get to the 2156 level by the end of.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. So if you're looking for, in my CD introducing the Rogue Wave, if you're looking for something, all you do is put it up, you open it up with your password, and you go to find, and then you type in Rogue Wave, and then you click on, and what happens is it goes to Rogue Waves. And every instance where it's stated Rogue Wave, it'll find it. So here we go. Let's click on here, click Rogue Wave. It explains the Rogue Wave, the notation of the rare peak G-top. It's part of the Rogue Wave. Often happens, we just saw that. Remember, we saw that peak G. And then you continue. And there it is, Rogue Wave. In fact, that's the V-shaped pattern that did not close decisively above the left side high. But let me just show you what I wanted to, even in point and figure chart, you can get, look at that, that's a perfect one. The technicals are failing, then pop, it goes up and fails. This is biotech, BBH's biotech back in the 140s. Let me just do this quickly. I want to find it. Yeah, so chapter 11A, an introduction to the Rogue Wave. And what exactly is the Rogue Wave? So we'll say, this is an analogy. The sign at the beach says high tide at noon. So at 12:08, you're sitting at the water's edge reading a book and relaxing when, splash, suddenly you're soaked and wondering what happened. Well, the tide might have turned, but that wave didn't read the sign. And that's basically it. You were short, you were correct to being short, but you know what? The price you were following didn't know that. It just didn't read the book, and it pops up. So that's that. Now, other thing is, Chapman Wave peak Ds, how important are they? Look how many times, I don't know, how hundreds of thousands of times in my time here at TFNN that I've shown you peak Ds. Look at this, A, B, C, and a fractionally higher top in the XAU. And what does it do? It plummets, and it goes what? Below the left side low. That makes this very important in the XAU. Why? Because the low of the 11th of October at 79.88, you have just 2 days. So this day needs to close at 79.02. It needs to close above 79.88. Let me just type that in. It needs to close above 79.88 today. And then it says, whew, saved by the bell. Now there could be a little bit of a rally to the previous high of importance. In this case, it's the 200 period moving average of 85.47. Hey, that's just way too high. I don't even think you can get there. Then you have to use the 120-minute chart, and it says 83.62 is probably the limit. Now, what's very important is that I've got that pattern that I keep talking about. It's not perfect because it's not got a left side, right side price time match, but it certainly looks like it's got that arch formation, the lowercase h. Remember the dreaded h? The whole reason why I came up with this whole technique was back in the early 2000s when golds were fading, and I had a peak D, and I think it was Newmont Mining. I'm not 100% sure, but it was a monthly chart of one of the major golds that said, hey, watch out. I think we're going to make pierce the left side lows. And in the Chapman Wave methodology, that dreaded H pattern, which I always talk about, that is chapter, I should have it memorized, chapter 17, right here, chapter 17. And that's the pattern we're looking at, chapter 17, right there, the dreaded H. And let's just go lower. And that's the pattern we're looking. Look, that left side low gets taken out. It goes to the next one. Left side low taken out. Can make an even larger one. And that one can turn into an M, lowercase m pattern. So got to be real careful now with the golds, because the dollar has that inverted pattern. Unless I'm reading it totally wrong, I think the dollar somehow, now it's even higher. It's up 30 cents. I think it's going to 100.52. And once leg D starts in the monthly chart, we've got to be looking at a bunch of things. What's the implication for gold? I've been talking about gold perhaps later on getting to a level where it's going to be a major buy. I don't think it's going to do that just yet. This is leg E, very quick leg E in the weekly chart of the dollar. And this, if it starts a brand new leg A, instead of just, it can't be an E because we have the low right there for trough A in the dollar on the 7th of October in a Chapman Wave instant restart at 96.40. So this low that we're looking at of 95.89, that started a brand new move to the upside. This is like the Dow and the other indices that I'm talking about. I think we've started leg A, and perhaps there's a peak A in the Dow, but I think we're going to go to a B, C, and D higher levels, even if it gets very choppy. So I hope that's covering some of what we discussion. The next question I had was XLF. What about the BKX index? Well, the BKX index, that is the Keefe Brewett Bank Index, which I've followed for years and years and years. KBW Bank Index broke out. It's in leg B in the monthly. It's in leg D in the weekly. It's in leg, perhaps it's an F in the daily, but everything about it says it's holding really well. This could in fact be an instant restart, and it could be an F/B. And because of the way it's acting right now, I am going to put an F/B. Well, if that's the case, it should go to higher highs, even if there's some kind of a consolidation. So Bob asked me, Goldman Sachs, JP Morgan, BKX, wave count, time to short. I'm just going to suggest to you, Bob, within the context of shorting, look at the weaker stocks. The weaker stocks tend to go down to lower lows and lower highs. The strongest go to higher highs and higher highs and higher lows. Not always higher lows, but in the concept, it's higher lows. I would not be wanting to short this at all. I'm wanting to buy. Give me a really big break to the downside, and that XLF, which is in leg D, possibly peak D today, that I am calling a D because it could still go to E and F. That'll correspond to other things. I could even call this a recycle. I don't want to. I'm going to be very strict, but it's a leg C. And the reason why I don't want to mess around is the XLF is like an IPO. The BKX is what I really want to be doing and analyzing. This is because they changed the makeup. You remember they took out some of those, I think it was, what was the Tower, American Tower or something. They took out some of them. And they put them into the REITs index. So this is, I'd rather be looking at the XKE, XKRE. KRE, I always forget what the symbol is. KRE, which is the Spider Regional, S&P Regional, and that has that F/B. And I'm sure this is not an F, but a recycle in the weekly chart. The leg B, I'm calling this a leg B in the monthly. This is powerful stuff. So don't think of shorting. Short stuff that is looking terrible. The other thing is, yeah, I know there are certain stocks that have gone higher, emotionally higher, because they don't have the veracity yet. Yeah, in that case, on an individual basis, if you do analysis, absolutely you can short, but not a sector that is on fire, because look at this, the yield, TYX.X, I should look at the TNX, but this yield also is getting me an F/B. But look at that, almost close to the, who would have guessed when I put that 5 in that it hasn't yet made a peak and that it's still in 5 to an E, above the resistance line in the TYX in the weekly chart, on the line in the monthly chart. This is serious stuff for interest rates. Now, I will have a whole thing for subscribers that I hope to have time for over the weekend, talking about the Japanization of bond yields. Is that all over now? Well, you know, we've had a tidal change. We've had a tidal change in administration about to come up. This is just a refuting so many major aspects of the Obama administration, of Clinton and Bernie and what's her name, Elizabeth Warren, that you have to look at this and say, wow, what's going on? Is this really a tidal change? Is this more than a tidal change? Is this a tsunami to the change? We won't know, but you remember, a lot of this was signed into, it wasn't voted on, it was signed in. So legislation could change.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Don't forget, folks, great programming coming up all day, right up until 5. So let's just do this. Here's a 10-minute chart trying to form some kind of a base. This kind of inverted V-shaped pattern is going to be really important. Taking out the low of 11 o'clock yesterday at 2147.75 in the 10-minute, not good action at all. But if it holds here and doesn't take out the low that was made just a moment ago, 2148.50, 4 bars ago, that's going to be really important. So we'll see what happens, but I do believe that the daily chart of the Dow should be going to higher highs, and the S&P should be following. I'm a little concerned that the XLK, and I did this for my subscribers, talking about this in my daily newsletter. The opening call comes out starting at about 6 or 6:30 in the morning. I send out charts as soon as I can. And it goes Dow chart, and then it goes Dow 120-minute chart, maybe the overview section. But whatever it is, by 8:35, I send out my report that's called the Traders Corner, and that has all our positions. And there are bullet points. I talk about parameters to look for the GLD, the TLT, whether or not we have these things, it doesn't matter. I always have. And someone just asked me about my Dow Quartet. Yeah, look at this GE chart, holding so beautifully. And we are long. We have a small position. It's a 30.55. We're in at about, I can't remember, I think it was 28, somewhere around 28.80. And it's now, it hit today, it hit yesterday, 30.89, was it? 30.84. Very nice action. The weekly chart. This is very important. It needs to hold next week. No matter what happens, it cannot break 29 support. That'll be very poor. IBM had a spectacular day yesterday. Today, it's following through with a plus 20 with a new recovery high. This is peak ABC. This is leg D. And yet leg D is coming off a potential low, means you can go higher. So we're going to be watching IBM very closely. I think it's back in the running as a viable business instead of being a defunct dinosaur. Look at Triple M, or 1, 2, 3, 3M company. Fabulous leg B unfolding. A weekly chart is improving. Monthly chart is still very good, but it's UTX that actually has taken the lead. It was Triple M. Now UTX is way up at 107.65, made a low of 97. That's 10 points. That's 10 was about 11% in just a week and a little bit. And this is a gray leg A. If it goes above 109.83, I have to call it, if it's this leg, I call it an A/F or F/A. But everything about it, he has that almost a V-shaped pattern. That'll make the monthly chart extremely positive if it can hold and then close above 109.83 for a whole week. That'll be really good. That's the Dow Quartet. And that's what I'm saying, that I think that the Dow is now representative of the sector rotation that we've seen for almost 20 years now. Since 2000, we haven't had the Dow actually being a real leader. All of a sudden, the Dow is becoming the leader, and that's really important. Okay, so now let's just do this. Over the weekend, I'll send out charts to my subscribers of opening call, as I always do. This is really important week. We want to see the closes in all the different indices. My thinking, dollar goes higher, gold goes lower. The TLT says, I have to do a lot of analysis. I'm sure I'm not going to be able to make that without a monthly chart, but I have to say, in the TLT, is this finally the end? Look, we're testing now the 200-period moving average. In the weekly chart, is this the end of my concept that goes back, it must be 20 years, that when I discovered that Japan was making their interest rates 0%. And I said, hey, one day the United States, the economy will change to such an extent, we will go to 0%. We'll follow that. I call it the Japanization of our bond yields. Is that changing? Is this really a tidal change of major magnitude? I'm going to be trying to decipher that over the weekend. We have no position actually at this time in anything in the bonds. So thank you so much for being here. Really important period. A rotational correction has continued, but in fact we've had a breakout to the upside in the Dow, and that is a major positive in the monthly charts. So thank you so much for being here. I'll be back Monday. Stay tuned for some great programming, and thank you to the vets once again. Have a great weekend.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN. TFNN.